Welcome to TalkTickers. We're your shortcut to understanding the key insights from today's earnings calls.
And today, we're jumping right into the DraftKings first quarter 2025 earnings call.
All right, let's start with the top line results. What did they report?
Well, DraftKings pulled in $1.149 billion in revenue for Q1.
Okay.
That's a solid 20% increase compared to last year. Adjusted EBITDA also came in positive at $103 million.
Sounds pretty good, but I heard there was a guidance revision.
Yeah, that's right. They did adjust their outlook for the full year 2025.
Okay.
They're now guiding revenue to between $6.2 and $6.4 billion.
Yeah.
And adjusted EBITDA is expected in the $800 to $900 million range.
So a bit of a pullback from previous expectations. What drove that?
It seems mostly down to some customer-friendly sports outcomes, especially in March. Think March Madness.
Ah, okay. Bracket busters, maybe? Or bracket winners for the customers?
Exactly. That plus a tax rate increase in Maryland and having Jackpocket exit Texas.
Oh, yeah.
Those were the main headwinds they mentioned. Interestingly, they did say that without those specific factors, they actually would have raised their guidance.
Oh, okay. So the underlying business, the core drivers, are still performing well then?
That's the message, yeah. They highlighted things like product enhancements, boosting their structural hold percentage, how much they keep from bets.
Right.
And they're getting more efficient with promotions. Sportsbook handle, the total amount wagered, was strong and basically met their expectations.
So despite the revision, they're still projecting pretty hefty growth for the year.
They are. Fiscal year 25 revenue growth is still pegged at 32% year over year.
Wow.
And if you look just at Q2 through Q4, they expect that growth rate to be even higher, around 36%.
Okay, let's unpack those customer-friendly sports outcomes a bit more. You mentioned March Madness.
Yeah, apparently the NCAA men's tournament saw a record number of wins by the higher-seeded teams, like 82%.
82%, that's really high.
It is. All four number one seeds made the Final Four, for instance. So naturally, that meant more payouts to customers than usual.
I see. And that offset any gains from, say, the Super Bowl?
It did. They said the Super Bowl outcome was actually favorable for them, but March more than wiped that out.
But they're confident this is just random noise, essentially, part of the game.
Pretty much.
Yeah.
They emphasize the volatility is random based on their historical data, not a trend they're worried about long term.
Okay. And what about the wider economy? Any signs of macroeconomic pressure on their customers?
They don't seem too concerned right now. They pointed out that online gaming has historically been quite resilient, even during downturns like the financial crisis. And their current customer metrics still looking strong, right in line with forecasts.
Yeah.
They even mentioned seeing some potential benefits, like advertising costs softening a bit.
Interesting. So maybe some efficiency gains there. What about their balance sheet? How are they fixed for cash?
They ended Q1 with $1.1 billion in cash. And that's after buying back about 3.7 million shares.
Okay, pretty healthy.
Yeah, and they expect that cash position to strengthen as they generate more free cash flow through the year.
And the handle itself, how did the betting volumes trend?
Overall handle was up 16% year over year in Q1.
Solid.
Even in their more mature states, the ones lived before 2024, handle grew 11%.
Yeah.
So good organic growth.
And looking forward.
April saw a slight slowdown, but still strong growth. March handle specifically was up 14% year on year. Baseball handle year to date is up around 16%. For Q2, they're anticipating handle growth in the high single to low double digits.
Got it. What about the other side of the coin, iGaming? How's the online casino business?
That actually showed some nice acceleration. April iGaming revenue jumped 26% year over year.
Oh, wow. That's a big jump from Q1.
It is. Q1 growth was 14%. They put it down to improvements in their product, marketing, operations, and how they're using promotions.
Speaking of promotions, always a big cost factor. Are they getting more efficient there?
Seems so. Their promotional reinvestment as a percentage of gross gaming revenue, or GGR, was lower year over year. And they expect that trend to continue, spending less on promos relative to GGR over time, mostly because of the mix shifting towards existing users and that structural hold improving.
Right. The hold improvement helps cover costs.
Exactly. Though they did note promotions as a percentage of hold might flatten or slightly increase.
Makes sense. Now, AI is everywhere. How is DraftKings using it?
They're definitely leveraging it, both for revenue generation and cost savings. Things like document summarization, improving customer service efficiency, applying it across the business, really.
And market share. Always competitive. Do they feel they're gaining ground?
They believe they gained share in basketball. A big driver there, they said, was the growth in live betting.
Ah, the in-game action.
Yeah, it's now over 50% of their total handle. Acquisitions like Simplebet are helping them offer better live options and, importantly, get better margins, better hold rates on those live bets.
Any specific sports examples?
They mentioned MLB live handle was up 36% year over year in April alone.
Wow, okay. Let's go back to that structural hold concept. You said it improved.
It did. It actually beat their expectations in Q1, came in at 10.4%.
And going forward?
For the second half of 2025, they're targeting slightly north of 11%, maybe just under 11% in Q3, then over 11% in Q4.
What drives that increase later in the year?
Primarily NFL and NBA seasons kicking in. They see a really strong mix of same-game parlays, SGPs, and regular parlays during those seasons. And those types of bets inherently have a higher hold for the house.
Gotcha. So pulling the guidance details together, what does profitability look like?
They're still expecting sportsbook net revenue margin between 7% and 7.5%. Adjusted gross margin, though, got a nice bump in the forecast, now expected at 46%.
That's a decent improvement.
Over 300 basis points year over year, yeah. And they gave a bridge to free cash flow, too. They see about a $100 million gap between adjusted EBITDA and free cash flow.
Meaning free cash flow for the year should be?
Around $750 million for fiscal 25 is the expectation. And for Q2 specifically, they're forecasting adjusted EBITDA over $200 million.
Okay, solid numbers. What about M&A? Are they looking for deals?
They view it as one option, alongside buybacks and organic investment, to create shareholder value. They mentioned past deals like Simplebet and Sports IQ are already paying off.
So nothing imminent on a huge scale?
Doesn't sound like it. They said large global M&A isn't a current need. Focus is still very much the U.S. market. But they're open to the right international opportunities if they pop up.
Right. You mentioned handle grew faster than new users in Q1.
Yeah, new user acquisition was basically on plan, but handle accelerated faster. Seems existing users are betting more, likely driven by that live betting growth and the popularity of parlays and SGPs.
Interesting. Any updates on newer areas like prediction markets?
They're having conversations, apparently, talking with state legislators, tribes, kind of raising awareness and discussing potential legalization paths. Still early days, it sounds like.
Besides the sports outcomes, any other headwinds they called out?
Taxes, mainly. Rising tax rates like the one in Maryland are a concern.
How so?
Well, the worry is that if taxes get too high, it could push people towards the illegal market. Or it might force operators to offer a weaker product, maybe less competitive odds or fewer promotions. Kind of a balancing act.
Yeah, that makes sense. R&D spending was up too.
It was, partly due to those recent acquisitions. The focus is very much on product improvements. They mentioned good feedback on their NBA product updates, and they have baseball and golf enhancements coming too.
They also have that DraftKings Plus test running, right? How's that going?
Yeah, the limited launch in New York. They said initial results are encouraging high customer satisfaction, good retention.
But no big rollout yet.
Not yet. Sounds like they want to do more testing before expanding it further.
And just confirming on the macro resilience, no signs of weakness in customer spending across different groups.
Their data isn't showing any significant impact so far. Seems the customer base is holding up pretty well against broader economic conditions, at least for now.
Okay. And the share buybacks, still active.
Yep. They bought back $140 million worth in Q1. And they reiterated commitment to the full $1 billion program the board authorized.
Good to know. Last couple of things, marketing spend and the Jackpocket integration.
Marketing spend is tracking to plan for the year. They mentioned digital ad prices are a bit softer, which could be an opportunity.
Right.
But that's being offset somewhat by Jackpocket leaving the Texas market.
Yeah, and the integration itself.
It's underway. They expect to have Jackpocket integrated into the main DraftKings app in the second half of the year.
And Jackpocket's contribution for the year.
Because of that Texas exit, it's now expected to be around break even for profitability this year. But they definitely still see it as a key growth asset long term.
Okay, that covers the call pretty thoroughly. Now let's shift gears to our This Is Not Financial Advice segment. Time for some speculative fun.
Right.
So thinking about DraftKings really pushing live betting, the growth there, the complexity with parlays. Here's a thought. Maybe look at companies specializing in real-time data analytics for sports betting.
Okay. Go on.
Like firms that provide hyper-fast, reliable data feeds and maybe AI tools to help operators like DraftKings set live odds instantly and manage risk on those complex SGPs. As live volume grows, demand for that kind of infrastructure could really take off.
I see the angle. Faster, smarter data needed for faster, smarter betting.
Exactly. It's purely hypothetical, of course, just the thought exercise.
Okay, my turn. Sticking with the live theme and the randomness factor they talked about with sports outcomes. What about a paired trade?
Oh, interesting. Long, short.
Yeah, maybe long DraftKings, betting on their execution and market position.
Right.
And short, a basket of companies may be more exposed to needing predictable sports outcomes. Think maybe certain media companies heavily reliant on consistent ad revenue tied to big, predictable sporting events.
So hedge against the unexpected blowouts or upsets that can swing betting results.
Kind of. If sports outcomes get really weird one quarter, DraftKings might take a hit, but maybe those media companies also suffer from lower viewership or advertiser uncertainty. It's a way to play the volatility aspect. Again, total thought experiment, not advice.
Absolutely. Fun to think about, though. Okay, that wrapped up our deep dive into the DraftKings Q1 2025 earnings call.
We've covered the key results, the guidance, the drivers like live betting and structural hold, and some of the challenges.
We hope this breakdown helps you understand where DraftKings stands and what they're focused on going forward. What stood out most to you? What will you be tracking?
Definitely worth keeping an eye on that handle growth, the iGaming acceleration, and how that structural hold develops through the year.
Indeed. Thanks for tuning in to TalkTickers. Join us next time for another earnings deep dive.